Hey, what's up everyone? Welcome back to another Elliott Wave analysis for XRP. In this video, we're going to discuss where we currently stand here on the macro and why my vision for XRP still remains the same despite the current drawback that we're seeing, which was also to be expected. I think it's incredibly important that we stay focused here in the midst of chaos. Remember, we talked about two variations of how XRP's price action could have unfolded on the macro. One was through an impulse idea when we did break that all-time high, but that failed. And now we are working in what's potentially a flat idea. The basis of the Elliott Wave Theory is that you always want to work with two of the highest probable scenarios, one primary scenario and one alternative. And right now we are working in that alternative idea ever since a few months ago that we discussed, and we are getting very close to validating this idea. And if all else fails, there is a very good chance that XRP will not go for a bull run, and at least we will be able to kind of retire two of the bullish ideas. But once you fall into the alternative scenario like we are right now, it usually becomes far more probable in playing out until it ultimately fails. But for now, since we have been discussing the potential flat idea for quite some time, I think it's good to talk about how this is going to be resolving and what potential targets may be in store for us. But with that being said, if you are interested in seeing faster updates for XRP, please make sure to hit that like button and subscribe to the channel. And I also do offer a Discord membership where I do periodic updates, and as a member you also do gain access to my personal portfolio and market sentiment that I update very frequently. So please don't hesitate to use any of the links in the description below. Also, we do offer a entry-level membership that is accessible through Patreon, where I do 2 updates a week for Bitcoin. That could also help you if you are interested in getting a deeper dive into the Elliott Wave Theory. So starting off with the macro here, we discussed a potential expanded flat playing out. Nothing new here. We've been talking about this for quite some time, where we have 2 extreme points of interest. The B wave here creating a fake out point at the all-time high, and then the current C wave that we are also in that creates a fake out point below the market structure of this previous low here, that wave A. And to kind of keep it simple without overcomplexing the theory, we also have a measured target that you see here using the pivot points of wave A and B to get the C wave target. Now, this fib projection is not arbitrary. It's kind of a way to quantify crowd behavior when a correction turns emotional. Basically, it's a trap and kind of a liquidation structure where wave A is the first counter trend of the larger trend that we were expecting because we did get a breakout from that previous move. And then the B wave is the overconfidence phase, and then the C wave becomes the reality check where everyone who bought the B wave at the top is now wrong and exiting at the local bottoms because of their stop losses, or they just lose confidence in the overall structure of the XRP. So this wave C is basically driven by emotion and not balance that is shown in the waves A and B, which is in 3-wave structures, which is why it's an impulse structure shown as a 5-wave move to the downside for a wave C. So it's not random in length because of given how big the first counter move was for the wave A, it basically answers the question on how far the price will travel once this wave B completes. So this 1.618 or the 161% extension is the most common target because it aligns with the market psychology of basically maximum emotional imbalance is the best way I can put it, where the ratio clusters around that 1.618 level is where late participants are kind of fully flushed out at that point, and new smart traders are going to be stepping in to save the day. But the kind of key note here is that the markets will not reverse there because price is really cheap. It reverses because the sellers are exhausted at those levels. And usually you'll see sellers being really exhausted. You'll start to see some bullish divergences being occurring. So that is a very important level. And that's why that 1.618 is a very, very important level. So it's kind of a probability zone where a statistical sweet spot of kind of emotional unwinding is occurring. And the Elliott Wave Theory works when you treat those fib levels as a psychological gauge and not just some magic number. So that being said, since we did get a breakout of this larger previous prior trend, above this BD trend line, we have to follow the trend, which means that we did get a follow-up of a 5-wave structure to the upside as a 1, 2, 3, 4, 5 that led us into that first wave 1. So using that context in mind, that's the whole point of the Elliott Wave Theory, is the context of all the surrounding waves and using it on the larger time frames, which gives you a higher probability that here, if you have the following components of a 3-wave structure as a wave A and a wave B, and then and you have even a follow-up as a 5-wave structure to the downside, there's a very good chance, probability-wise, that this is now working in a pattern recognition known as the expanded flat idea. So now that we are now kind of trading in that area that we've been expecting below this previous market structure, there's a very good chance that XRP is now finally finishing up what is going to be the bottom of the C wave, since we do have what is possibly a wave 1, 2, 3, 4, and then a 5. It's not the best looking structure, but it definitely fits into the context of the larger macro pattern recognition, and that's the key point. Because like I said, we broke out of the prior 7-year triangle. We had a follow-up of a 500% move that's clearly and objectively clear as a 5-wave move. We have a wave 1 that's in the making. We got a 3-wave pullback. It wasn't an impulsive move, so it's very clear that it was a corrective structure. And then we had another corrective structure, that B wave point that we talked about, creating a maximum point above this previous point here. And then we have a new extreme point below this market structure. So that gives us the overall pattern recognition of the expanded flat idea. So there's nothing new there in terms of the overall macro. If we do get a bounce all the way down from these levels, basically at 150, all the way down to the 108, 1.09 cent level, is basically free for all. We're going to see high volatility happening here. We're going to see a lot of exhaustion, but at the tail end of when we start to get an idea of how this impulse is going to complete this 5-wave move over here, which is going to be tentative. It's going to be very messy, I'm sure. But when we do finish it, anywhere in this box here basically is going to be a buy zone for the smart investors if this is the main idea that's going to be seen by all the smart traders basically. So if this does turn into a wave 1 to completion, what does that mean? Well, we got a wave 3 in the making here, a wave 4, and then a wave 5 that's pending that could bring us up into that $20 to $25, $30 region that we're looking for at a later stage. And that is why my cycle targets still remain the same. And again, using the pivot points and also understanding the different types of Fibonacci projection targets, it's also the same idea. We use the pivot points of wave 1, 2, depending on where this is going to be ending. We do have that 61.8 and the 100% level. And then that stacks on with the risk management idea. We don't want to be a prisoner to our own bullish ideas. We want to start taking profits when we start to hit those major Fibonacci levels. And $6 is one of those major important levels that I think we are going to see some profit taking, and we'll have to reassess at those levels and how this may be turning out. So that's that. Now, we want to understand also how this zone is playing out. We want to continue our previous idea of how we talked about XRP from our local time frame idea. We talked about removing the market inefficiencies of these wicks, and we use what is known as the line chart that gives us a better, clearer picture of how these impulsive and corrective structures are playing out. So if we see here, this is that zoomed in target after we had that 500% move, and this is the expanded flat idea, that pattern recognition that we discussed. So we have this WXY, the 3-wave structure, nothing new here. We have a potential WXY or an ABC here, depending on if you're seeing this or validating it based on your own personal idea. I can definitely say that this is an expanding leading diagonal. I know a lot of people don't like to say that this is not one, but it is according to the new rules and guidelines. Then we have a 3-wave structure here and a clear impulse structure to the upside. What's very important here is that there's a clear 3-wave structure. Again, we want to understand the context of things. It doesn't really matter how you count it. What matters is that it's a connector piece with this connector piece here, and that gives us the following projection of how the C wave could be playing out. So we have a wave 1, 2, 3, 4, and then a potential 5th wave in the making here. In our last video, we discussed this wave 4 potentially being topped here, and we are now working in exactly what is known as the impulsive wave for this 5th wave alone. So you can see this Elliott wave structure does nest all the way down to these lower time frames, and they become a little bit more inefficient on the local time frames, but it is what it is, and we now have pretty significant data now that we can work with, that we have pretty high conviction that this is a wave 1, 2, and a 3, and a 4, and a 5. We have pretty much 3, 4 major pivotal points that gives us the overall trend. So that's that. And again, the overall projection targets that 161.8% zone all the way from this level here, this box here, is pretty much all free for all for the bulls and the bears to fight to give a potential bottoming structure here. And as an Elliottian, it doesn't really matter what levels those are. We're just waiting for the potential reversal of a 5-wave move to get our first confirmation, and then another 1, 2 pullback, and then the 3, 4, 5s to continue. That will give us the ultimate confirmation. So that's how we're currently seeing XRP, ladies and gentlemen. Again, if you you are interested in seeing more updates for XRP, please make sure to hit that like button, subscribe to the channel, And if you are interested in the Discord membership, please don't hesitate to reach out using any of the links in the description below. Thank you very much. I hope that was helpful, and let's stay logical, and we don't want to be emotionally biased towards a bull or a bear. We just want to follow the trend using the Elliott Wave Theory to the best of our ability and using it as a tool. Have a fantastic rest of the week. Bye-bye.